Welcome back, traders. As we head into the final stretch of the year, the big question on everyone's mind is what's next for the markets. To help you prepare, I have put together a special technical outlook packed with the most important chart signals and price pivotal levels that could shape market action in the year ahead. So today I will break down three major players that dominated headlines. So this year, gold, USDJPY, and the US 500, or otherwise the S&P 500 index. More video outlooks will follow up in the coming weeks, so stay tuned and let's now jump right in and uncover the setups you need to watch. So starting first with gold, in the weekly chart, the precious metal had an amazing rally. It's around 60% up since last year. That's its fastest rally since 1970s. And of course, the big question now is whether such a remarkable rally will be repeated in the year ahead. Well, as you can see, we're currently within a symmetrical triangle, and usually such triangle patterns tends to develop to the upside in this market. As we can see, we had two triangles at the end of 2024 and in the mid of 2025. So let's see if that triangle will also develop to the upside. If it does, if the price successfully overcomes the 4250 level, I expect a continuation towards this resistance line over here at 4700. That also coincides with the 161.8% Fibonacci extension of this downfall, so that adds extra importance to this territory before we shift our attention to the 5,000 psychological mark and even up to the 261.8% Fibonacci mark of 5,117. Now, of course, upside. Of course, there are bullish catalysts still in the market, including Fed rate cuts, geopolitical risks, and central bank purchases, which could still support the precious metal. But we cannot exclude downside moves either, as the market seems to be trading in the overbought levels according to the RSI and the stochastic oscillators down here. And another warning is that the current price action has significantly increased its distance with its 50 weekly moving average as well as the 200 weekly moving average. So that suggests an overstretched rally, and the price may attempt to reduce the gap with those lines. So in case we see a downside reversal, the first signal of a bearish action could come below the 4100 level, in which case the price may seek support somewhere between 3825 and 3880, where the 20 weekly moving average is placed. Now then below that, this support trend line coming from December 2024 could also attract attention near 3700. A break below that could send a second negative warning, and then all the attention will turn to the 3500 number where the previous high is placed. We can see that the 50 weekly moving average is also approaching that zone. So a violation here may probably dampen market sentiment and confirm additional declines towards the 3330 mark, where another longer-term support trend line is placed. And in this case, any declines lower would officially call for a negative trend reversal. Now, looking at the US 500 index, the index had also a significant performance. It's up by more than 16%, and of course, what we would like to see is some more all-time highs in the year ahead, which we cannot rule out, particularly after the rebound near the 20 weekly moving average. So if that rebound over here holds, we might see another positive extension early in 2026. Once, of course, we successfully overcome the 161.8% Fibonacci extension of this downfall near the 7,000 psychological mark. And personally, I would also keep a close eye on the on the 7170 zone, which includes this resistance line. So once we successfully surpass this, I expect, let's say, a sharp rally up to the 7500 level, which represents that a 10% typical growth for the US 500, annual growth for the US 500 index. Then beyond that, the 8000 mark could be the next target, and the 8300 mark, which reflects the 261.8% Fibonacci extension mark, could also come in sight. Now, US indices have successfully sailed through turbulences. They have the index managed to hit new all-time highs despite tariffs, despite Fed rate cut delays, and geopolitical concerns. So perhaps if the AI optimism dominates and helps the price to remain supported, we could see more higher highs and higher lows. Now, in the event that the AI optimism fades out, and since there are still concerns about overvalued AI stocks, then that could add extra pressures. And if things with tariffs even got even worse next year, that could also be a bearish risk for the US indices. Particularly if the Fed finds difficult to cut interest rates as well. So all this could negatively weigh on the US 500 and other US indices. Now, in the event of a bearish correction, any declines may not be very concerning until the price breaks below the 6520 and 6640 zone, confirming this doji candlestick, bearish candlestick pattern, which keeps downside risks intact. So a confirmation of this pattern could actually send the price aggressively towards the 6150 zone, where the previous highs placed, and lower than that, the 100 weekly moving average at 5820 may attempt to support the price and block the way below the 5600 level. If not, if we see an extension below the 5600 level, then all the attention will turn to the support trend line, which is the lower band of this long-term bullish channel that was clearly visible since the end of 2021. And finally, looking at the US at dollar yen, dollar yen, unlike gold and the US 500 index, couldn't actually post significant gains. It managed, of course, to recoup most of its losses and return and attempt to approach the 159 level, but it's still down by 1% year on year, and negative risks are still intact. The price failed to surpass its previous high of 158.86, maintaining this bearish head and shoulders pattern on the chart. And as we can see, the technical indicators are still flashing overbought conditions, so I wouldn't rule out a pullback in the coming months. Perhaps a break below 153.45 could lead the price towards the 149.20 zone, where the support line is placed along with the 50 weekly moving average. Then failure to hold here could generate extra losses towards the 143 number. And that could be an important region to watch because the 200 weekly moving average is also placed within this zone. However, what could officially signal a bearish trend reversal is a break below the neckline of this head and shoulders pattern at 139, in which case I expect a sharper decline towards the 132 number. If the Bank of Japan adopts a more hawkish tone, and if more rate cuts follow up, so that could add weight on dollar yen. Otherwise, if the US economy proves more resilient, delaying any rate cuts, or even reducing the number of rate cuts in the year ahead, we could see the US dollar reversing to the upside, and any successful penetration above the 159, 163, and 160 1.70 region, that could actually help the price to head towards the 170 psychological level over here. Then beyond that, the 175 number could be the next target, but let's see if such a value would be if the Bank of Japan would accept such a value. So that's everything I wanted to share with you guys. Hope this video was very helpful for your trading. More video outlooks will follow up in the coming weeks, so stay tuned. And you can always find us in our website, so where you can subscribe and log in to find our articles. So that's all from me. Thank you for watching and see you next time. Bye bye for now.